Okay, we were in the calendar validation. So now it was okay. IT corporation built with exception sets. Okay, all done. So now this calendar will be available for our setup in inventory. IT Private Limited inventory. Fine. Okay, all these are naming conventions only. You can very well use just one name and assign multiple organizations to the same unit. It is not required you follow what I am showing you, but as some best practices to identify what is your inventory or what is your operating unit, it is best to assign some different names and proceed further. Others, inventory information. ITC, IT Private Limited, calendar IT Corporation. See, now calendar is available. Up to what supply. Okay, nothing to be done. Then costing method is standard. Yes. Okay, valuation account, material account. C1, CHN, function we give 0. Inventory material value 1410. Okay. Material expense account C1. These all are we providing defaults only. We can it is based on if we are using costing, supply chain management, and your purchasing module, inventory module. All these modules, if we are going to use in future, at the time we can assign very well. Otherwise, you most if it is a service organization and they do not have any inventory, etc., they can very well define it as with their default values. Okay, material expense account. Yes, and this one. Okay, start revision. All this I am keeping. Start serial number 1. Okay, all this I am keeping as a default, whatever it is. I'm not going to change anything. And where it is not required, it is means it is ATP defaults, means it is pricing module. We have a different module called pricing. In that module, this details will be used. So we just proceed with basic values. Okay, inter-organization transfer charges. Right now we are doing none because we have just going with the normal one organization with the one chart, one company. But in the consolidation and intercompany transaction, which I will show you in the next. Okay, so the accounts. Hello. Okay, these are the other accounts setup I will do. C1, CHN, Here I will write variance and we'll see purchase price variance. We have material purchase price variance. Okay. So C1, CHN, variance, invoice price variance. Okay, when you have a standard costing and inventory, if you are following, that all variance will come. AP accrual, C1, CHN, function, AP. Okay, inventory AP accrual, intercompany, fixed. Okay, that's all. Sales, C1, CHN. Okay, we have sales revenue over here, starting with the account number 4. So we can select 4. Let me see. Okay, right now I'm taking this one. Cost of goods sold, C1, CHN. Okay, this whatever account I am defining, it will be different in case of service industry. Okay, as I explained you just before, service industry doesn't have any inventory. They work based on the just services. So what will happen? That inventory is mostly negligible. So they will not be heavy using inventory purchasing. A purchasing module they can use it because they may issue some purchase orders and get some fixed assets related things. But they will not be using inventory module. They will not be using costing module and other things. So that's the reason they will use just one standard account for everything. If I say one account is there, let's say other miscellaneous account. Okay, I define just one account. I can use the same account all over where it is yellow. I can use the same account. So if it is a manufacturing company who you which is primarily focused around materials, they are very well using this feature. And once you are comfortable with the financial module, other modules integrating with the other modules will be easy because base is the basic setups and finance. And see, but the inventory organization setup is mandatory if you are in EBS, e-business suite. But inventory organization setup is not mandatory if you are in Fusion. So these are the differences. This is effort cost of goods sold. Okay, we do not have anything. We can very well use the 5110 and proceed. Okay. Now this. And these all the defaults, whatever is defined, it is saying that costing method cannot be changed once it is enabled. So it is just a warning message. Click OK, and it is saved. You can very well do this default setups kind of this, and once you are in the respective module, inventory module, purchasing module, order management, all this, where the inventory org is completely utilized, at the time you can very well define the module specific values and let it flow down to your transactions. So it is all possible. Accounting informations we defined, and receiving information also. We are all done with this setup. Now we move to accounts payable. In the accounts payable, you have the setup. First, you have to do the option setup. Then we'll proceed with the other setup. These all are the default setups. It is not going to impact liability. C1, C1, purchasing 210. C1, C1, purchasing 210. Bills payable also C1, C1, purchasing. Notes specific. Future dated payments. Okay, discount. Purchasing account. Discount taken. Then move forward with the supplier purchasing module. IT Private Limited. IT Chennai. Location. It is coming from the location. IT India Chennai. C. ITC, IT Private Limited Inventory Organization. We forgot to do the setup, and that's the reason it was empty. Shift where we are not going to. Encumbrance is used when you are going to use the purchasing module. Right now, I am not selecting anything. Tax VAT register member state. It is mostly India. VAT registration number you can provide over here. Let's say to 33 1 2 3 4 5 6 7 8 9 0. And human resources. In the human resources, I have the business group. Expense reimbursement address. Okay, this is basically used for what we say, the employee expenses reimbursement, that is I expenses module. We will see that also as well. And this is employee number generation is manual because we have done the setup at the business group level manual. So it is showing as the manual. And now save it. Okay, record once saved and applied. So this defaults now saved. That very well can be changed in future. or if these defaults are flowing to next level, that is when you create the suppliers and all, at that time also you can do the variable changes. So this is financial option setups one. Then payable options, sorry, payable system setup. It is related to supplier. Supplier number is what you want, enter automatic or manual. Mostly automatic. Some companies use manual processing, and some companies use a different system to process master data. So at that time, the numbering will be the automatic. Control invoice match option. Purchase order, the by default, if it is a receipt, you can very well. And payments INR, and pay group, pay invoice currency is INR. Pay group is used to group your suppliers. I have three different suppliers. One is who is supplying me hardware, one is who is supplying me support services, one is who is supplying me the softwares, and one who is supplying me the managing my administration. So I can very well group these suppliers by deciding what kind of group I want to assign. I create 10 suppliers, and that 10 supplier is divided into multiple groups. That's it. That's a hardware suppliers are three different suppliers are there, and that all will be grouped under the hardware supplier, software supplier, support services supplier, administration supplier, and other suppliers. Likewise, I can define term date basis. Term date basis, either system date, goods received date, invoice received date. By default, we are giving it invoice. Term date basis means what is the term the supplier is providing you. Let's say supplier is giving you 30 days from the invoice date. Means even if invoice is of 1st of July, if you receiving this invoice on 10th of July, it will calculate your days, the 30 days from the 1st of July, and not from the date when you receive the invoice, because this is the agreement you have done with your supplier. You can very well do the agreement with your supplier. When you receive the invoice, then only the 30 days will be calculated. So you can very well do the setup as invoice receive date. And goods received date also you can do if you are using purchasing module. And if system date means by default it will take the system date. So right now we are taking as invoice date. Pay date basis, discount date. Payment term, by default it is showing immediate. But we have lots and lots of payment terms available. These all are the payment terms, 30 days, 15 days, and you can very well decide your own payment terms and design over here. So right now, we are using immediate. Always take discount if you enable. It will be possible to, and create interest invoices means whenever you are delaying payment, you will be creating invoice for interest. So we'll come back and we'll enable these features and we'll see how it is impacting our system. Save this payable system setup. Close this one. Next is the payables option. Under payables option, you have multiple things like for account, from accounting, taxation, withholding, all this will be covered in this setup. Payments as well. So accounting options, payment accounting, account for the payment when the payment is issued. It is all defaults. You have to proceed further. If you want, you can very well decide. Okay, click OK. This is saying that if you change anything over here. Accounting option for payment. when the payment is issued, when the payment is cleared. Account for gain and loss, when payment is issued, when payment is cleared. Bills payable account source, it is the payment document or supplier side from where you want to take the bills payable, that is future dated payment. I want to take it from the supplier side level. Okay, let me explain you the accounting over here, what I have done here. Payments. Okay, when you issue the payment, what is the normal journal entry? That is, bank account will be credit, supplier will be debit. This is the normal transaction, normal accounting entry. In case of Oracle, they have multiple setups. So, okay, when you issue payment, based on the clearing option, it is automatic clearing, manual clearing, or that means the reconciliation option. It depends on the accounting also depends on this. If you are using just issue as a accounting, then it will impact bank. It will be like this only. Okay, if you are using issue and clearing both, then it will be bank clearing credit, supplier debit. And when clearing of this transaction means a reconciliation of this transaction will happen, bank credit, bank clearing will be debit. So you see, ultimately, if I see bank clearing credit here, bank clearing debit here, it is 0. Ultimate accounting entry, supplier account debit for the payment, bank account credit. This is the reason all these options are available. Automatic offset method, it is none right now. Balancing an account. Okay, if you are using what multiple legal entity, means you have multiple balancing segment in a legal entity. If you have multiple balancing segment, or there is a centralized purchasing is happening, suppose Infosys Limited is there. Okay, Infosys Limited Bangalore is placing the order for 1,000 computers with the HP Limited, that has to be distributed between Hyderabad, Chennai. Okay, 600 to the Hyderabad and 400 to the Chennai. Let's say 1,000 laptops, okay, at the price of 50,000. At the price of 50,000. So it comes equals to 5 crore. Okay. Now this has to be divided between Chennai and Hyderabad. Chennai, Hyderabad. Okay. Equals to 0.4. Equals to 0.4 into this. Equals to 0.6 into this. Okay. Suppose I have this as a C1, C2. As a I will be transferring my these laptops, and these are the Chennai and Hyderabad. Okay. If I select none, means what will happen? And Bangalore also involved, because this Bangalore company is placing the order C3. If I am selecting none, the liability account will be C at the level of C3. It is not going to split. So liability at the C3 So, liability will be at the C3. It is not going to split and create intercompany items. If I select balancing, means it will take the balancing segment at the distribution level. Okay, because I am creating C3, then C1, C2. In the C1, C2, I am giving. So this will be the credit, because supplier liability is at the this level, and this all will be the debit distribution. Okay, if I am selecting none, it will be like this. The payment will be done over here, and later I will process the intercompany in the GL level. Okay, if I select the balancing, what will happen? It will take, it will distribute the C3 into two parts. It will distribute C3 into two parts. It will be like this. Let's see. Okay, your C3 of 5 crore divided into C1 and C2, like this. So this is the reason if you are selecting the balancing. If you select the account level, it will replace the account at the distribution level and create the accounting entry. So ultimately, the accounting will come like this only. We will see, we cannot see this feature now. These all are the test when you do the practice and implement. But once we complete the GL module, I will show you because in the GL module, we are going to process the intercompany. So once the setup is ready at that level, we will come over here, we will change this option over here, and we'll see how the accounting is happening with the multiple legal entities. Okay, this point I am keeping pending. Right now I am automatic absort method, I am keeping as none. Discount method, system account, prorate expense, prorate tax. Discount, how it will be. So normally it is always system account. Whenever discount is there, I will be just taking the discount at the expense level. I am not going to use the tax account. If I want, I can use any of this option. Interest. Interest, I am going to use the system account, and prepayment account, I will take from the supplier site level. Then I have currency. If you have multiple currency, you can very well define over here. Use multi-currencies. Multi-currency means if you are receiving supplier invoices other than INR currency, maybe in USD, Euro, or pounds, etc. So right now I am selecting nothing here. If I am selecting nothing here, you will not be able to process your invoices for foreign currency. We'll come back. We process now INR. We'll enable this system and we'll see how it is appearing over here. Okay. Till then, we keep it very simple. We are not going to use this tax combined filing program. Use pay side tax region, not required. Most of the options are also available as part of US implementation, and that's the reason we are not using any of this feature. Invoices. Confirm date as invoice number. If you are not entering invoice number, it will take date as a invoice number for that supplier. So you can very well check or uncheck this box. Allow online validation. We will see what is online. Allow document category override. Okay. Allow adjustment to the paid invoices. If you want to adjust any paid invoices, you can very well do that. But still, that is all available at the option. Recalculate the scheduled payment. Yes, it is required. Allow remit to account override. Uh, if you do this, it will allow you to change the account at the payment time, in which account you want to do the payment. If you enable this, this will allow you to do the payment to a different account. So most of the organizations do not use this. Allow remit to supplier override. This is required when you are going to do the payment to somebody else on behalf of supplier, but supplier will have given you that who will be the receiving person, that money receiving person when the when you are going to do the payment. Suppose you have invoice with the ABC Limited, but ABC Limited wants you to do the payment to the XYZ Limited. So if you enable this feature only, then only it will do the that activity. Otherwise, no. GL date basis. GL date is nothing but the accounting date. Okay, you have the invoice date which supplier gives, but when you receive it and book in your system, that is the accounting period. So how you want to decide the accounting date? It is the invoice date, system date, goods received or invoice received date, goods received or system date. So mostly it is system date, because today I am receiving the invoice and I am processing today. It is today's date. Okay. Now freight account. If we are using multiple line items, and for that we have the freight, it will separately book the freight charges for that account. Prepayment payment terms. If it is prepayment, you can very well process with immediate payment terms. Settlement is tax differences, nothing. These all are based on the what we say, invoice, that supplier agreements. Okay, how you are having the agreement with the supplier and how you want to process the accounts payable for that. Okay, approval. This we will enable once we complete all the setups. Matching is that when you have the purchasing module enabled, you have the complete process, like you raise the requisition to the purchasing department select release RFQ, request for quotation, and then supplier gives their quotation. So purchasing department select the supplier, and once the supplier is selected, you process the purchase order to the supplier, you receive the goods, and then you receive the invoice along with the goods. An invoice will be processed by the accounting department. At that time, you will do the matching of your invoice with the purchase order, invoice with the receipts, and all this. So this is the matching option. So right now we are not using purchasing module to process this, so we are leaving this fields as a blank. Interest, if you want to calculate interest on your overdue liabilities, then we have the expense report. Expense report is used when we are processing employee related expenses. Right now we will process supplier, then we will come back over here to see the supplier employee expenses. Then payments. Okay, in the payments, you have discount, exclude tax from the discount calculation. Okay, when you are going to take the discount, you can very well exclude the tax, because nobody wants to take the discount on the tax. You can very well enable this. Single payment, allow pre-date, allow void and reissue, allow address change. bank charges. Okay, whenever you do the payments to the supplier, sometimes bank will charge you some bank charges. So you can very well allow enable the bank charges from the payments. Okay, allow remit to supplier override, allow document category override, all these options. So right now we are doing this exclude text from the discount calculation. Next is the withholding tax setup, that is TDS. Use withholding tax. Yes, I want to use. Allow manual withholding. If you want, you can very well do the manual withholding tax. It means you are going to create the withholding manually by yourself. If we will see this option, so right now I am enabling use withholding tax. Apply withholding tax at the time of invoice validation, at the time of payment, at the time of invoice validation and payment. Mostly at the time of when you receive the invoice, at that time you do the withholding tax calculation. Create withholding tax invoices. If you want, you can very well create the withholding tax invoice, or if you don't want, you very well leave it as it is. Never create a withholding tax invoice. You simply process the accounting. Withholding date basis, it is the invoice date, because in India most of the time when you receive the invoice, based on that you do the withholding. Include income tax type on invoice with no, not required. Withholding amount basis, include discount amount, include tax account. Okay, suppose there is a withholding on the VAT as well, you can very well include this one, include VAT. Otherwise you can very well skip this one. Then we have the supplier. In the supplier we can provide the very well defaults. This default is already provided in the another payable system setups, so you can very well give over here as well. How you want to process at the time of invoicing, this will be the default, and at the time of supplier creation, that default will be taken from the payable system setups. Then you have the reports, not required. So what you have done over here is it is the setup you done to process your invoices as well as payments. That's all. It is nothing to do with the anything. You can very well come back and change any of these settings. And yes, we are done with the basic setups to process the supplier creation, process the invoices for the suppliers. So we will see tomorrow in the next tomorrow session, creation of the supplier, processing of various different types of invoices to the supplier. Okay, any doubt till now? You can very well ask me on tomorrow's session before we start the supplier and invoices. And tomorrow we will be seeing also checking how the accounting will work. Okay, so any doubt you can ask me tomorrow, or you can very well drop me a message now itself if you are doing practice now. Okay, Kiran, open here.
Yeah, sure.
Okay, and thank you very much for joining today's session, and we'll continue tomorrow.
Okay, thank you.
Thank you.